Hi, this is Randy Finney with Right Side of the Chart, and this is a midday market update for Wednesday, May 29th, 2019. I'm going to start out here with the broad markets, do a quick update there, and time permitting, try to hit on some of the trade ideas that I've mentioned recently, both the official trades and just a couple unofficial trades that I've pointed out recently. And then I'll hit on Bitcoin and gold and GDX, time permitting, because I always get a lot of questions on those. All right, so let's start out here with the broad markets. That's where a lot of my focus lies recently. And you had today, remember we had this 280, call it 280 to 282-ish support there. We danced on it for a little while. We can move that line down now to capture those two reaction lows right here on these two candles. We gapped down below that today, but as I mentioned in the recent updates, we have pretty decent support just below, and I also laid out a scenario that if, that not only would I not care to short that breakdown, but I would sit tight with longs, and because there's a scenario that could be in play here, and that's why I'm doing the video of a nice flush out move, stop clearing move, or short suck in move. That's what we call a lot of names for it, but called a bear trap, if you will, because those are well watched levels. We'll get to those in a second, and especially on the 60-minute chart. So far, we have only the first part of that. This is important. In other words, we've taken out the supports, we've dropped, we put in a marginal new low, but it's still a divergent low at this point in time. So far we've hit support. That support I pointed out in pre-market today before we opened, and I think in yesterday's videos, 277.53, or call it 277.50ish on SPY. I don't know if you can make it out here, but right here is the 200-day exponential moving average. That comes in really nice right around that price support level as well. So there's dual support that SPY hit today, and so far has reversed off there. So far so good. But again, there's several components, or really two main components to that bear trap scenario, and that is number one, a false breakdown that runs below there, and it sucks in some more shorts. People short, clears out stops on longs, and then the second part, which is just as if not more important, of course, is you have to have the reversal. The reversal says you get back up above, above where you broke out, because then all those who shorted here are squeezed and they start covering their shorts. And so again, if we can get up, print the day, obviously for starters, doesn't have to happen today, but it'd be really nice to see the markets close green, because that would be a big reversal. We were down pretty good today. A green close would certainly be a start, but I'm going to go over the levels we have to recover. Right now, let's just say give or take around 280 on this daily chart. We'll get a little more granular here in a second looking at the 60-minute charts. So there's SPY. Still have the RSI divergence in place there. And then QQQ, you had comparable support at 175.66. And again, so we danced around 3 days of consolidation, gap down today, sold off from there, and so far that support is held. As I always say, all that matters on a daily chart, if trading off the daily time frames, is how it closes. So right now, we could still close down below that level. I mean, we're in a that's why I want to get this video out. I want to get it out far in advance of the close today to show you levels that I'm watching. But as of now, we undercut the support briefly, which is perfectly fine intraday, and we're back above it. That's 175.66, give or take. 200-day moving average is a little below down here on SPY, or QQQ, that is. It's at 174.54, and that's the exponential moving average. So there's some additional support. I'll tell you, until recently, and even in today so far, they've been selling every little pop, every little rip, every time this market tries to get going. And that shows there's a lot of trap longs. Those longs that were buying this, buying the breakout to new highs, and got trapped in here, and they want out now for whatever reason. Let's just say maybe they've been in here for, 3 years. It doesn't matter. All that we know is every time you've seen these pops, we keep going lower, and that means that right now the sellers are in control at this point in time. All right, let's take it down to the 60-minute charts. Here's my bounce targets. I'm still looking for a bounce this week. I'll tell you, my convictions aren't super high, but they're really, about on par where they were yesterday. Even though we went lower today, again, it was a scenario laid out. We were here before, we had divergence, and I said, we could certainly cut those lows, extend the divergences, and that's what's happened today. I'd like to see this PPO curl up here. I'll tell you, really, from looking at QQQ right here, first thing that needs to happen, and it would be pretty important and pretty big if we do, is turn green. Because if we turn green today, there's yesterday's close right there. I don't know if you can make out, there were a couple dotted lines there. It's probably hard to see in the video, but the top of that candle. So there's a gap. There are those lines. So we need to go up there. Now, that's the first step, because that will take us above price former support, which is now resistance, and that's this line right here. That's a pretty big level there. And then just above that, we need a little more work to take us above the top of the wedge. Here's that bullish falling wedge I've talked about recently. It's been forming. And remember, there's in trading, there's a huge difference between a trade setup in an actionable trade. Now, like I said, you can buy some moves down to support. That's what we hit on the daily chart. But as far as a bullish falling wedge pattern, it's just a potential bullish falling pattern. I mean, the price, the nature of a pattern, prices are falling, you're in a downtrend. The buy signal comes, it's a setup until you trigger a buy signal. Buy signal comes on a breakout above the wedge pattern. So that's what you want to look for. If the wedge pattern was to break, you also want to see you know, if it happens today or sometime tomorrow, you want to see it also take out yesterday's close, you know, backfill that gap and then some. And then you can see again, those are the additional targets. These are resistance levels overhead, and they're still upside targets. Remember, we already hit that 179.64 the morning after I posted it. So we already had two failures there at that resistance level. And as I said before, I'm going to cover both sides of this here. I know I'm leaning towards a bounce. I said the nature of whatever bounce we get here will be indicative, or kind of give me some clues as to what's underneath the hood right now in this market. And I said before that if they were to reverse and the market goes much lower after hitting even just my minimum bounce targets, that's quite bearish. This is my max bounce target here. This is, you know, preferred target zone right now. That's what I'm eyeing if we do get a bounce here at this point. We'll see. We'll see the nature of it even if we get a rally. We don't have one yet, so I don't want to get ahead of myself. And if we turn around and dump out and we close below, take out today's lows and close below by a good margin, this market, it's, you know, right now it's broken. Doesn't mean it's going to be broken forever. There's still plenty of support below. Got to be careful shorting. The more this rubber band gets stretched, meaning the more oversold you get in the near term, the sharper the odds are, or the higher the odds go for a quick, sudden snapback rally. All it takes is one tweet from, you know, Trump, or some kind of headline that comes out somewhere, and you can have a lot of shorts cover. So you know, the risk reward to shorting, even though the trend is down, it starts to diminish the lower you go, the more oversold you get, and the closer you get to key support levels. So that's that. Let's just see what happens today. Again, I'll do a video wrap up at the end of the day. It's still anybody's game, and like I said, let me just, before I move on to the next one, all we have right now is part one of two, let's call it, of that failed breakdown, bear trap, false breakdown scenario. Part two is going to require us to come on up here and take that, break out of that wedge and move up with conviction. I think it'd be safe to say if and when they can take out that 179.64-ish level, you know, those recent reaction highs, then that will probably continue higher there at that point. So as of now, let's just wait and see what happens today. SPY, same story. There's well, let's go back. I already did that on the daily chart. I think I told, yeah, showed you that level is held so far intraday, 60-minute chart. There's that divergent low. See, S&P 500 did not have positive divergence until today, at least not on the PPO here. Before, you had prices were still making a higher high from the compared to the previous low. Even at the close yesterday, they closed slightly above, but they gapped down today. That gives us now bullish divergence, or potential bullish divergences on both SPY and QQQ, and that can, you know, set the stage for rally. The work to be done for SPY, first things first, and that would be a recovery back, again, you know, just to turn green. That will get us back above this former support. Support, once broken, becomes resistance, so now that area, you know, call it 280, 280-ish or so is resistance, and of course the downtrend line would be the next resistance after that. Quick look at the futures for your ES traders. Here's the ES S&P 500 E-minis. Here's the big downtrend line off the highs, something to certainly watch if we get there soon. There's your divergent low right now, right to support. I posted this chart in pre-market. In fact, I've covered this chart for weeks now, and these levels, I believe all these levels were on there, is all potential downside target support. And so that's the one we hit today. We undercut that 2804. That's where I was favoring a bounce the other day, but as I said, taking it down and coming through here, this would still keep that bounce scenario intact. Really don't want to see it go much lower. If it does, I'm out. But as of now, still holding tight and hoping and expecting to see a reversal here. But hope is a four-letter word in the market. So if they want to cut on down here and make another impulsive move towards new lows today, that's just not going to look good, especially if we close the day below that level. So let's watch that level. At this point, don't focus on 2770. Look at today's lows, since we overshot it with a brief momentum fueled overshoot. But now you have quite a bit of work to do the other way around, because that 2804, or call it 2800 level, 2800, that was pretty significant. It was very good support before, and it broke, and now that's going to act as resistance on the way up, or it should. So if that gets taken out, then your next resistance level is this downtrend line, and if that gets taken out, that'd be pretty bullish. Then of course, I could add some levels here. I don't have all the overhead levels now, and there's another reaction point right there. NQ, the E-mini futures, same story. Danced on 7282-ish support for all the way coming back here to the 13th of May right here. Came tested, finally broke, but it hit the next support below 7180, and so far almost to the button. Look at that reversal there. We zoom in real tight, you can see that's the level that was pointed out this morning. Two 60-minute candles hammering right off the bottom of there so far. So far so good, but again, I can't impress us enough. We're not out of the woods yet. We are doing, the market could turn down. By the time I get this video out to you, we may have dumped and broken that support level. So work to be done, but it's, if you're an aggressive trader, you certainly take a shot here at a long with a stop not too far below. You can also try to short it if it breaks, if you're an aggressive trader, but you just have to manage your positions accordingly. And if you don't know what to do, this market's whipping you around, you're new to trading, stand aside, let the dust settle, or keep in mind what I've been talking about. The bigger picture is still, to me, clearly bearish. And again, I keep talking about, trying to pick up nickels in front of a steamroller, because I believe there's more downside. And that downside, we may not get that bounce now. This market may not have it in it. What happened from December 24th up into the recent highs was just the market got way ahead of itself, and from those overdone rallies typically come very powerful and sharp corrections. And again, it's going to tell us the nature of this. If the buyers don't step in here, it just means there aren't enough buyers out there right now. There's too many longs trapped in the market. They want out. There are not enough buyers on the sidelines to pick up those sell orders and drive stocks up. So don't get married to your positions either way. And here's a chart of wheat futures. We still have the wheat trade, still waiting for that final target to get hit. And I do think it'll be hit, T3. I'll get to the wheat, WEAT. But remember, the ETNs don't do a perfect job of tracking. The futures are what is really tracking wheat. The ETNs just have to they buy the futures to attempt to track prices of wheat, but the futures are the pure play here. And you can see there's a really nice level. I've had this level on this chart for quite a while, 522.250, and that was hit. Was it late last night or early this morning in a reversal? But we're coming back to support now, and it's just natural profit taking there, and I think we'll get another leg up soon. May have to consolidate here, but we're coming up again. If you can see it here, that was a former target here. A couple reaction highs right there. So, and even if that level goes, you still have plenty of support. It's just like the market right now on the way up has a lot of resistance overhead now to overcome. So wheat has a lot of support levels if this pullback continues, but the longer term charts are constructive. I'm not going to go over those here. Let me just give you the wheat ETN Show you that trade, what it looks like. And remember, a lot of what you're seeing on the futures charts, they happens overnight, especially with wheat, because wheat doesn't trade. Wheat stops trading, I think, at around 2:15 Eastern time, wheat futures. So even the ETN will continue to trade because this is an ETN. It's going to trade 9:30 to 4 p.m. But there's really no activity because the futures that it tracks stop trading. So that's probably where we end up closing the day. So basically a pullback to T2, big bearish engulfing candle. But again, these are not showing the real picture of wheat futures. It's just showing the 9:30 to 4 p.m. trades, which is staggers. The wheat futures, they don't trade that whole time period. They're more of an overnight into the midday kind of trading session on those. JO Coffee Futures, we hit T1 today. That was posted as a trade setup on Friday with a break long entry to be triggered on any move over $33. That's shortly after it did trigger, and it's just been moving up since. I've said many times I've traded these commodities for years. I've been waiting, for these. The charts have been setting up. When they run, they can continue to run. So if you're, looking at my targets and saying, Randy, you're crazy. You think coffee can run up, 32%, especially in short order. Yeah, I put it on as a long-term trade too. And look, it may not hit those targets. It may stop here. But there's many times right here, even this is just a bear market rally. In a larger downturn, there was a 30% rally right there. So if coffee wants to run, it's a very lopsided trade, and there are probably a lot of shorts caught in here. It could continue to power on through. So I can just tell you right now, my preferred swing target, I'll have to reconcile that with futures right here. The 36, this T2 level around 36, 37, you can see quite a few reactions there, but it could easily power on. So if you're just a long-term trader, and if nothing else, remember the beauty I think of these and why I trade commodities and trade bonds, and I'm all over the place. One day I'm talking about Bitcoin or the miners. It's diversification. One day I might be, my index longs might be underwater, but then my commodities are firing on all cylinders, or bonds or gold or something else. So it's all part of asset allocation and diversification, and that's why I try to keep various trade ideas out there at most points in time. And regarding the, we added TBT as a short trade today. You can also short TLT. TBT is a 2-time leverage short. I do that if you don't have a margin account and you can't short. Say you have IRA or just a regular cash account, trading account, but it's not a margin account, then you can buy TBT, and that's a way to go short by not having to borrow on margin and short. So this laid out. We basically, let's keep it very simple. I put that in the notes today. I had a target, a long-term trend target from the breakout of this bullish falling wedge for a move up to 128.56 and or a test of this trend line, which come in roughly together. So we're right there between. We almost hit the trend line today. I'll say this, and I said it in the post. This trade is largely but not exclusively contingent on what the stock market does, because if we break these supports that I just showed you and we melt down and we're going to drop another 5-10% in the market before a meaningful bounce, which is certainly a possibility, TLT is a flight to safety instrument, but I do like the fact that the markets are coming to support. We have those 60-minute divergences at the same time TLT is hitting this target. So if the markets do bounce here, even just for a week or so, or if it's a quick bounce, you should see a lot of money come out of treasuries. That's a flight to safety bid, and so you'll see if the market rallies, you'll probably see profit taken in treasuries there. So keep that in mind. That's somewhat of an overlapping trade, but there are times where that inverse correlation between stocks and treasury bonds is not in play. So it is certainly possible that you can see treasuries start to correct even if the stock market goes down a little more. So either way, another way to spread your eggs out and not have them all in one basket. And on TBT, this is the chart of TBT. I'm only using this target now to try to get more of a tactical trade, for a pullback. It's still a pretty decent, we hit it right at the lows today so far. Let's knock on wood. About 5.5% gain or so if we get there. And depending on what happens with everything, with the charts of treasury bonds, with the equity markets, I may extend some targets here, maybe to that second target there probably. That might be at most, but we'll see. We'll just have to see how things go. Like I say, the charts are dynamic, and so is my analysis. All right, that covers most of what's active right now. Some things that I've highlighted recently. That's not it. REMX. I highlighted a couple days ago. I like the rare earth stocks. Rare earth. Those are. Here's a. I don't have it with me, and I had a watch list on another monitor. I couldn't pull it over. Um, Let me try to get that for you. Hold on. Okay, here's my watch list of some of the. These are some of the components of REMX, the ETF. The ETF's the easy way to go because a majority of these companies, rare earth metals, the rare earths are usually not. There's some that are mined in the U.S., but a lot of them are China, Australia, elsewhere. So a lot of these companies are not U.S. companies. So just want to point that out there. But you can, you can trade these individual names. Or really, a lot of these are rocking now. They're low price, so when they run, they run. There's a 462% gain in just the last few weeks there on that one. REMF. You can see the tickers. You see U.V. That means it's on the Canadian Venture Exchange. You get the picture. So I'm seeing movement in these. I'm liking what I'm seeing. I'm seeing a breakout. For example, on this one, Avalon, there's a downtrend line breakout, a lot of volume. So, I don't care what's going on with the trade wars. I don't think the market does either. The charts certainly don't. If a chart's bullish, it's telling you what happens is the insiders know what's going on there. So anyways, there's movement there. I mentioned the other day on this pullback, somebody asked, I said, yeah, we broke above 15, but we pulled back. Oops, I missed it there. Nice little pullback to support here. And it's powering up, so we want to see it take out that previous high. I'm still targeting at least that 1675 level right there. And maybe move that down a little bit. You know what? Let me do that now for you because we have some reactions there. You want to be safe, maybe book profits a little shy of about 1640 or so. But if they continue to run, sometimes you can have these runner trades where these things can just go and go and go. So you can see these were support levels on the way down, which may serve as targets. But again, just one of many ideas. Oh, and by the way, big divergent low right here. So I'm not looking for just a quick swing trade. This could be a bottoming trade here with a lot of upside potential to go. So how do you do that? It's a volatile sector, certainly. You get a decent entry price, maybe scale in, and then just manually ratchet your stops and let it run. Periodically raise your stops, and as long as the chart looks constructive, you can let it go. Again, just one of several trade ideas out there now. And it's something that I also like it because it has very little, if anything, to do with the broad markets, these stocks, these companies here. Another one that's on my radar for potential swing trade idea, needs to do a little work, is LIT. It's a global X lithium ETF. I like some of the lithium companies in there better than others, so I may do a video soon or post some of the individual trade setups there. But like I said, little work needs to be done here, but I'm seeing a nice divergent low. Potential needs to curl up. We need to reverse here sooner. These divergences get taken out, and then that chart won't look so good. All right, here's Bitcoin. There's been a lot of buzz about that lately. Back here, when you can go back a few weeks in Trader Room, we had a gap here, and we had I was looking for a pullback to this trend line and a backfill, or a move to the top of that gap, and that's what it was. We hit the top of that gap, but at that point, I said my preferred scenario would have Bitcoin holding that level. That trend line support there. Here's the trend line I'm talking about, and then going on to bounce, make a new high, and in doing so would put in a divergent high and then set us up with a nice shorting op. Now we don't have any sell signals, but there it is, a nice rising wedge. We now have that divergent high I was looking at, the new high with the indicators making lower highs down here. Keep an eye on Bitcoin. What might trigger the reversal? Maybe a rally in the stock market. This has lately been a flight to safety asset. People are moving into some alternative currency, a lot like gold, probably sucking some of the luster out of gold right now too. Here's a big old gap to be backfilled. So maybe even a quick pullback target to there. Like I said, no sell signals yet. I'll have to study this chart a little further, but at this point, I would be more interested in shorting Bitcoin here than going long. Even at the top of the wedge, it could certainly go higher. The divergence lines could extend. I'll just have to watch that one. It's gappy too, keep in mind. And these are the futures, GXBT if you're a futures trader. And if you don't trade futures, GBTC. Works like an ETF. There's an option, another proxy to trade Bitcoin through your stockbroker. That's about it. Oh, look at a lot of inquiries about gold. I'm watching gold. It makes a sense for a portion of one's portfolio. At this point, nibbling, scaling in, but until and unless we get a reversal on the dollar, gold's not going anywhere. At least not anywhere far. This gold will be an official trade if and when this breaks out, and it'll be a long-term trend trade. I'm looking for a major bottom in the major top in the dollar, bottom in the euro, but it hasn't come yet. Right now, we're clearly in a downtrend. We need to break out of this bullish falling wedge that I've been highlighting, and also take out that 113-ish resistance level, and that would spark a nice rally in the euro, drop in the dollar, which will give us a nice rally in gold, but we're not there yet. So, and the fact that the market's going down and gold's just kind of sucking wind, like I said, maybe Bitcoin's soaking up some of that demand for the flight to safety bid. Treasuries certainly have been. Here's GDX. Got an inquiry on this again today. Same story. I mentioned it last week or recent updates. Here's a big symmetrical triangle pattern, and it's going nowhere. So better fish to fry. Now that's not going to last forever. It's getting closer to the apex, so we'll break out one way or the other sooner or later. If it breaks to the downside, so we have pretty decent support here around 1980. If it breaks to the upside, here's a resistance zone about 21 to about 2020 or so. But like I said, if the euro can reverse or the dollar, then GDX might be able to run up here. There's a pretty nice target up there around 2177. But a little work to be done, and I don't like dead money trades. And let me just say this as I wrap the video up. I say this very often. Some of the worst culprits for decay on leverage ETFs that I know of, traded many years, are Nugget and Dust. Nugget and Dust you want to own. You will outperform GDX by more than 300% if you're in Nugget in these strong unidirectional rips, or if you're in Dust when these strong, what I call unidirectional, not a lot of give back. Dust will do better than 3 times GDX here. However, you'll get eaten to pieces when you're in a sideways trading range, a grind. That's when the decay is at its worst. So you're going to lose more than 3 times. And same thing in a trading range. So you don't want to be in Nugget and Dust. If you want to sit patient in GDX and you're a long-term investor and you want to be in the miners but not trade individual mining stocks, you like the diversity of an ETF, use GDX. If you're a active trader and you're pretty good at timing entries and exit and catching the rips and dips, then Nugget and Dust will help because they're just giving you that extra leverage. You still need to account for it in your position size, but what it does, it frees up capital. So if you have an IRA account and you want to short the miners and you can't short stocks, well, that's what Dust is good for. And instead of shorting 30,000, you only have to buy $10,000 of Dust, and you're short $30,000 of GDX. So that's where I like to use those if and when. All right, let's wrap it up here and let's see what the market does. And I'll follow up before the close today. It's been all over the place today. Here's what GDX looks like, or QQQ on the 1-minute chart. Again, this is yesterday's close right here. We're going to need a rally. We're going to need to hold the lows today. We're making another run down at them right now as I'm wrapping the video up, but we're not there yet. So a little over an hour to go, and I'll do a closing market update after the market closes today. This has been Randy Finney with the Right Side of the Chart.